Welcome back, everyone. It's Monday, January 20th. Trump's inauguration day is finally here, and questions linger over whether his approach to make America great again will depend on strict protectionism or whether he will use a more friendly negotiating strategy to promote American businesses. Well, with TikTok going live in the US again and Trump showing some interest to visit China recently, it seems that he may use a more balanced tone against key trade partners, but that remains to be seen. He's still at the start of his second presidential term, so a lot of things could happen from now and then. Nevertheless, his words might be market moving, particularly for dollar loonie, dollar yen, and pound dollar. Don't forget that we also have some key events on the calendar, including Bank of Japan's policy meeting this Friday, Japanese CPI figures released on the same day, Canadian CPI figures, as well as UK employment and flash business PMI data. So these pairs might attract some special attention this week. Starting first with dollar loonie. Well, the Canadian currency is sensitive as regards international risks, so any strict language from Trump could add pressure on the Canadian dollar, likely helping this upward pattern to come back into play. Well, currently we can see that the price is still constrained below the 1.4465 level. This is the upper band of this sideways move, which we need to break to continue higher. I would also like to see a sustainable move above 1.45 before targeting the next barrier at 1.4585, and then higher than that, perhaps the price could approach this resistance line over here and the 2020 and 2016 highs registered between 1.4665 and 1.47. The higher than that, the 1.48 round level could be the next barrier. Now looking to the downside, if downside pressures resume, well, the 1.4340 and 1.4360 region will be important to watch. This is where the support trend line and the lower band of this sideways move is located. So a close below that could strengthen selling interest, likely driving the price towards the 23.6% Fibonacci of 1.4218. Lower than that, the outlook could worsen if the price also breaks below 1.4065 and 1.41 territory, where the 38.2% Fibonacci mark is also located. Well, if you look at the technical indicators, there is a risk for a bullish breakout, but as I said, we need a close above 1.45 to be more confident that this upward pattern will continue. Now looking at dollar yen, dollar yen had faced a bearish breakout last week, which increased negative risks. It fell below the 20-day exponential moving average at 156.65. That which brought more weakness, but the downfall was restricted just above the 50-day EMA and around the 155 level. It might be interesting to see whether the pair could move back above the 156.65 level in the coming sessions. If we look at the technical indicators, well, there are still downside risks in the market, given the fact that the RSI is still trying to climb above its 15 neutral mark, and the MACD is still following a negative trajectory. Nevertheless, I think the market could remain supported around this support trend line over here at 154.30 and 154.70, where the 50-day EMA is located. So as long as we hold above this region, there is potential for an upward move. If not, then the 153.30 region could act as could come to the rescue, while lower than that, the 151.50 and the 38.2% Fibonacci mark, as well as the 200-day exponential moving averages, could next add strong footing to under the price. And it's important to note to mention that the Bank of Japan is expected to hike interest rates by 25 basis points this Friday. the markets are already confident. They provide around an 80% probability for this scenario. So if the central bank delivers a rate hike, that could provide support to the dollar, but perhaps gains could be mild, as this is already a case that is highly priced in. And but let's see, probably that decision will depend on Japanese inflation data, which will come earlier on the day on Friday. And of course, Trump's inauguration address could also affect sentiment within the central bank. And now finally looking at pound dollar, this is an interesting case because the pair has been in a sideways trajectory between 1.2160 and 1.2230 for almost a week. So that increases the case for a directional move in the coming sessions. If you look at the technical indicators, the market seems oversold given the fact that the RSI has been flattening around 30 for a couple of sessions now. The MACD is also near multi-year low, so there's a chance for a bullish breakout despite the slowdown in the stochastics. But even if the price manages to rebound, it has a lot of barriers to overcome. The 1.2230 could come first into view. A break above that could meet the 50% Fibonacci tracement of this long downfall from 2021 to 2022. And then above that, perhaps the 20-day moving average and this resistance line at 1.2377 could block the way towards the resistance trend line here at 1.2450. And if this proves easy to overcome, the 50-day moving average as well as this longer-term ascending line coming from March 2023 could also keep the outlook neutral at 1.2568. If we successfully surpass that, then I expect the next battle to take place somewhere between 1.27 and 1.2770. Now, in the event of a pullback, if we break below 1.2160, there might be another opportunity for a rebound just around the 1.21 round level. If we fail to hold here, I expect some consolidation between 1.20 and 1.2035. This could be psychological territory to watch. If there is another negative correction here, probably we may see a steep downfall towards the 1.18 and 1.1835 region, where the 38.2% Fibonacci mark is located. Well, UK employment figures are coming out tomorrow, Tuesday, but the data will be for the month of November. So I think Friday's flash business PMI figures for January, which will be out on Friday, could be more important to watch. So keep a close eye on these pairs. Dollar yen, pound dollar, and dollar loonie could face some volatility later this week. So we should have a great trading session, and we'll be back soon for more technical analysis. Thank you for watching, and see you next time.